Right now, you can feel it. The pressure at the grocery store, the gas pump shock, the rent notice sitting on the kitchen table, the quiet anxiety when you check your bank balance and wonder how far it really stretches. This isn't just numbers on a screen. This is your life, your family's stability, and your wallet trying to survive in a world that keeps getting more expensive every single month. And if Social Security plays any role in how you pay your bills, buy your food, or support someone you love, then what just changed for January 2026 matters more than you might realize. Because for millions of Americans, that Social Security payment isn't extra money. It's survival money. It's medicine money. It's rent money. It's groceries, utilities, insurance, and peace of mind. When anything shifts in that system, even slightly, it can ripple through your entire household budget. One small adjustment can change when your money hits, how much you actually receive, or how far it stretches once the bills are paid. And that's exactly why today's update deserves your full attention. A lot of people assume January payments are routine, same schedule, same rules, same expectations. But this year, several quiet adjustments came together at the same time, and many people didn't even realize it until they checked their deposit or their notice. Some saw timing changes, some noticed deductions shifting, some wondered why their amount didn't match what they expected. And that confusion? That's dangerous when every dollar matters. Here's the moment you lean in. Because what changed isn't just technical policy language buried in paperwork, it affects how fast your money arrives, how predictable your budget feels, and how secure your future planning becomes. If you're retired, disabled, supporting aging parents, or simply planning ahead for your own benefits one day, this update connects directly to your real-world financial stability. And the most important part? Many Americans are missing the bigger picture of what these changes mean long-term. Not just for January, not just for this year, but for how Social Security functions moving forward. That's what we're breaking down today in simple language, without the confusing jargon, so you can understand what's happening, why it matters to you, and how you can protect your money. Stay with me, because the next section explains the first shift that caught many households off guard, and it starts with timing, not dollars. Payment timing, why your money may arrive differently. Let's start with the one thing everyone notices first, when the money actually hits your account. Your payment timing matters more than most people admit. When your deposit arrives a day early or late, it can affect bill payments, overdraft risk, automatic withdrawals, and even grocery planning. January 2026 brought subtle scheduling adjustments that surprised many beneficiaries who rely on predictable deposit cycles. Social Security payments are usually organized based on your birthday and benefit type. But when calendar shifts collide with holidays, banking processing rules, and internal payment batching changes, the timing can move slightly. For some households, the deposit posted earlier than expected. For others, it showed up later in the day or the next business cycle depending on their bank. That may sound small, but if you're counting on that money to cover rent or utilities due on the first week of the month, even a few hours can create stress. Here's where it gets interesting. Some banks now process federal deposits differently than they did even a year ago. Faster payment systems mean some people see funds pending earlier, while others see holds based on internal risk systems. That inconsistency can make it feel like something went wrong when it actually didn't, or worse, make you miss a real issue because you assumed it was just the bank. Another factor that changed is how payment notices and digital statements are delivered. Some recipients noticed updated messaging formats or slightly delayed confirmations. That can create confusion if you're used to checking your account the same way every month. If your routine changed, your awareness needs to change too. This matters for your budget discipline. If you build your month around a specific deposit time, you may need to adjust automatic payments or alerts. A bounced payment fee can eat into your fixed income faster than you realize. Your wallet doesn't care why a payment came late, it only feels the penalty. And here's the suspense point. Timing changes are often the first sign of deeper system adjustments. When operational rules evolve quietly, it can signal upcoming shifts in how payments are calculated, processed, or reported later in the year. That's why paying attention now gives you an advantage. If you noticed anything unusual with your January timing, you're not alone. But understanding it early keeps you ahead of potential surprises, because the next change affects not just when you get paid, but what actually stays in your pocket after deductions. Deductions and net pay. Why your amount may look different. You might have opened your bank app and thought, wait, this isn't exactly what I expected. Even if the gross benefit stays similar, your net deposit can change because of deductions that move quietly in the background. January often resets certain withholding amounts, insurance premiums, and adjustments that directly affect what actually lands in your account. For many beneficiaries, Medicare premiums are deducted automatically from Social Security payments. When premium recalculations happen or enrollment categories shift, that deduction can change slightly. Even a small increase can feel big when you're working with a fixed income. That's money you plan to spend on groceries, prescriptions, or gas, now redirected before you even see it. Some people also adjust voluntary tax withholding at the start of a new year. If paperwork was updated or defaults were applied differently, your withholding percentage might not match last year exactly. That can change your monthly take-home amount without any warning email or phone call. There are also recovery adjustments that occasionally apply if prior overpayments or corrections were processed. These don't happen to everyone, but when they do, they can reduce your deposit temporarily until balances are settled. If you didn't expect it, it can feel alarming. The key lesson for your wallet is simple. Always check your net amount, not just your benefit estimate. Small changes compound over time. $10 or $20 per month becomes hundreds over a year. And if you don't notice it early, you can slowly drift off budget without realizing why your money feels tighter. Here's where suspense builds again. Because deductions are often tied to broader system updates. When administrative formulas evolve, future adjustments can follow later in the year. January is often the first signal. If you're seeing changes, it doesn't automatically mean something is wrong, but it does mean you should understand exactly why your money looks different. Knowledge gives you control. Confusion creates stress. And next, we're diving into one of the biggest misunderstandings people have about January Social Security updates, the difference between expectations and reality. Expectations versus reality. Why some people felt disappointed. A lot of Americans went into January expecting their Social Security payment to magically feel stronger. People hear headlines, rumors, social posts, and optimistic chatter that creates hope, sometimes unrealistic hope. When the deposit doesn't match that mental expectation, disappointment hits fast. Here's the truth most people don't talk about. Even when benefit adjustments occur, inflation pressure often eats into the impact quickly. Prices don't wait for your deposit to grow. Rent increases, insurance premiums, food costs, and transportation expenses move continuously. So even if your benefit technically adjusts, your wallet may not feel relief. Some people expected a noticeable jump simply because it was a new year. But Social Security changes don't always work that way. Many updates are administrative, procedural, or gradual rather than dramatic. When expectations outpace reality, frustration follows. That emotional reaction matters. Financial stress isn't just math, it affects sleep, family relationships, mental health, and decision making. When money feels tight, people delay medical care, skip healthy food, or take on risky debt. That's why understanding the system realistically protects your long term stability. Another factor that added confusion is misinformation online. Clickbait headlines can exaggerate what changed or imply guaranteed increases that don't apply to everyone. When real life doesn't match the hype, trust erodes, not just in the news, but in your own financial planning. This is where you gain an advantage by staying informed and grounded. Knowing what truly changed allows you to adjust your budget strategically instead of emotionally reacting. And now comes an important pivot. Because while some people felt disappointed, others may benefit from these changes in ways they don't even realize yet. That's what we're unpacking next. Who may benefit quietly from these changes? Not every Social Security update creates loud headlines. Some benefits happen quietly in the background. Processing efficiency improvements can reduce delays. Statement clarity can reduce errors. Timing consistency can improve budgeting reliability over time. If you rely on direct deposit, system upgrades can mean faster posting, fewer processing hiccups, and improved tracking accuracy. That helps you trust your cash flow more confidently. For families supporting elderly parents, predictable deposits reduce emergency stress and last-minute scrambling. Digital access improvements also matter. Easier access to statements, notifications, and records empowers you to monitor your benefits more actively. When you understand your numbers, you can make smarter decisions. Some beneficiaries may also benefit indirectly if administrative streamlining reduces backlogs or processing delays later in the year. That means fewer headaches when updating information, resolving issues, or making changes. While these benefits aren't flashy, they improve long-term stability. And stability is priceless when your income is fixed. But here's the suspense moment. Quiet improvements often precede broader reforms. Watching these patterns helps you anticipate future changes instead of being caught off guard. And that brings us to something every household should think about: how to protect your money regardless of what changes next. How you can protect your budget right now. This is where you take control. Even when you can't control policy, you can control awareness and preparation. Start by reviewing your deposit history. Look for patterns, confirm your deductions, make sure automatic payments align with actual deposit timing. Set up alerts with your bank so you know exactly when money posts. This prevents overdrafts and helps you schedule bills more safely. If you rely heavily on one payment cycle, consider building a small buffer if possible. Even a tiny cushion can reduce stress. Review your monthly spending categories honestly. Inflation creeps silently. Track where your money is actually going instead of where you think it's going. Small leaks add up fast. If you support family members, communicate openly about expectations. Transparency prevents misunderstandings and last-minute emergencies. And most importantly, stay informed. The more you understand how Social Security evolves, the less vulnerable you are to financial surprises. Because the next section explains why staying updated isn't optional anymore. It's essential. Why Social Security is entering a period of change. Demographics are shifting. Technology is evolving. Financial systems are modernizing. Social Security isn't frozen in time. It adapts slowly but steadily. Administrative updates, processing changes, and system refinements reflect long-term pressure to keep the program functional for decades to come. That means beneficiaries should expect more frequent adjustments in how information is delivered, how payments are processed, and how verification systems operate. These aren't signs of instability, they're signs of modernization. But modernization requires awareness. If you treat Social Security like a static system, you risk falling behind. Understanding trends helps you stay proactive instead of reactive. This is especially important for younger viewers planning their financial future. Knowing how the system evolves today shapes how you prepare tomorrow. And here's the emotional truth. Your financial security depends not only on what you earn or receive, but on how well you adapt to change. Which leads us to the final stretch: what all of this really means for your future. What this means for your family long term. Every update influences long-term trust in the system. Stability builds confidence. Confusion creates anxiety. When families understand how their income flows, they make better decisions about housing, healthcare, savings, and support. If you're caring for aging parents, clarity gives you peace of mind. If you're nearing retirement, awareness strengthens planning. If you're younger, knowledge builds resilience. Financial confidence isn't about having unlimited money. It's about predictability and control. And right now, your awareness is your strongest asset. The bigger picture. Most people miss. Many people focus only on the monthly deposit and ignore the system behind it. But the real power lies in understanding how policies evolve, how processing improves, and how personal responsibility interacts with public programs. When you stay informed, you protect your family's stability. When you ignore updates, you risk being blindsided. This isn't fear, it's empowerment. Your future depends on staying informed. Your money tells the story of your life. Every deposit supports your safety, dignity, and independence. Social Security isn't just a program. It's the backbone of millions of American households. What just changed in January 2026 reminds us that even quiet updates matter. Awareness today protects your wallet tomorrow. Staying informed keeps your family strong. Understanding builds confidence. If this breakdown helped you feel more prepared, more empowered, and more in control, make sure you stay connected for future updates. Because your financial future deserves attention, clarity, and proactive action. Your wallet matters. Your family matters. Your future matters. And staying informed is how you protect all three.